Good afternoon, good morning, and good evening. And welcome everyone to New Paradigm Capital for Purpose-Driven Founders. My name is Michelle Eisenberg, and I am a program assistant here at the Nasdaq Entrepreneurial Center. And for those of you who may not know, the Nasdaq Center is a nonprofit building a better path for entrepreneurs worldwide by improving inclusion, access, and knowledge in entrepreneurship. So as you will see in the chat in a moment, the Nasdaq Center provides programs, resources, and exceptional mentorship to entrepreneurs across all races, industries, and geographies. So definitely make sure to check out those links and resources in the chat. And then just a couple of housekeeping items before we get started. First, let us know where you are dialing in from in the chat. We always love to connect. And second, we are going to open up for live Q&A at the end of the event. So please make sure to submit your questions for us in the Q&A function at the bottom of your screen throughout the presentation, and we will try our best to get to all of them. And of course, none of what we do could be possible at the center without all of the amazing support from our sponsors, including Nasdaq, Lehigh University, KPMG, Wilson Sonsini, Wells Fargo, the Nareet Foundation, Walmart.org, JP Morgan Chase, BPM, HubSpot for Startups, and Google Cloud. We are humbled by their contributions and hope you are grateful too. And so before we get started, we always like to launch a couple polls to step back, see how everyone here is doing today. This first one is going to ask, how are you feeling? Fearful, anxious, surviving, or optimistic? And then I'll give it just a couple moments here for folks to submit a response. Thank you, thank you. All right, I'll give it one more moment. Awesome. All right. I'm going to end this poll and share these results. Always great to see optimism in the lead, but definitely have some feelings of anxiety and surviving. So I'm very confident our presentation and conversation today might help alleviate some of those feelings. So I'm going to stop sharing this poll and launch that second one. What is keeping you up at night? Finance, sales, marketing, scale, pivot, team, or surviving? And this one just helps us understand your current needs as an entrepreneur so we can ensure the programs and resources we develop continue to be meaningful for all of you. Awesome. We got folks from Azerbaijan, the DMV, Arizona, Brazil, California, Istanbul, California. Welcome, welcome. So great to have you all dialing in here from all over the world. Super exciting. Awesome. I'm gonna end this poll in just a moment. All right. Closing out this poll and sharing these results. Awesome. Looks like finance, sales coming up in the lead. Very fitting for our conversation today, but got needs all across the board. So thank you so much for participating. And without any further delay, please join me in giving the warmest welcome to our special guest, Nilima Achwal, founder and partner at the New Earth Fund. Nilima, so great to have you here. Thank you for joining, and I'm going to pass it right over to you.
Great. Hi, everyone. Nice to see you here. So really quick in the chat, I want to understand what do you identify as a purpose-driven founder? And I just want to see in the chat box, if and how. Yeah, you do. Nice. Amazing. So this is going to be a little bit of a different talk. Oftentimes, a lot of the same concepts are recycled in our industry. And I think that we're entering a brand new time and era, not only for our industry, but for the world. And so this is reflected in our industry and it's reflected in our specific ventures. I love seeing all the yeses. I do absolutely. Yes, yes, yes. And all of this requires us to be really open to what these new systems and structures look and feel like in our industries as well as in our companies. And that's a little bit of what I'm going to be talking about today. Um, so let me just share my screen here for you. I hope you can see this.
Looks great.
Okay, perfect. So I've been in the impact venture space for about 15 years. I've worked across several continents, worked with hundreds of pre-seed, early stage, purpose-driven founders in pretty much every single industry, and compiled my learnings in terms of what makes a purpose-driven founder and what are the new mechanisms and mindsets that we can use to magnetize capital, especially in an increasingly difficult environment. Um, and I do have my chat box open. So as I go through, you can feel free to be giving me a lot of feedback. So if you like something, or if you are confused, just be giving me feedback in the chat box as I go through my presentation here today. So we are living in turbulent times. I don't know if there's a single person who would disagree with this statement. Last year, we saw the collapse of two longstanding institutions in the venture capital industry, SVB and First Republic Bank. And after that, there was a big pullback. And a lot of private investors didn't want to and still don't want to be investing into venture capital. And overall, I believe that a lot of the cracks in our industry began to show themselves. At the same time, we're seeing a similar shakeup as a nation, as a world, and in each of our individual silos and industries. So it's really up to us to be cognizant of what's happening and start to carve a new path through this chaos. And in terms of venture capital, if there's a couple of words that I would say defined this collapse, I would say one is herd mentality and risk aversion. So what is the state of venture capital at this moment? So we have 2024 will be the lowest year for IPOs and second lowest for M&A, which is buyouts, in the last 10 years. This is a problem because, in case you're not aware, that is actually how venture capitalists and their limited partners, the people who invest in the VCs, actually make their money, is when a company either exits through a buyout or through an IPO. So what we're seeing is a total lack of liquidity in the venture market. And so people don't, there's a pullback on people investing into funds, which trickles down to the founder level. Here's a statistic by Fundera, which is 99.95% of startups are not funded by venture capital. And that's, at one point, there was statistics floating around like 1-2%, which is still, a lot. And this most recent statistic is that only 0.05% of companies are venture fundable. So what does that mean? It means that they have the unique technology and innovation and market combination that venture capitalists think that it can grow 100x, right? But I think that there's other factors that play in terms of why this number is so low. But you have to remember that if VCs are not wanting to invest in your company, you're actually part of the norm. And number three is that 95% of venture funded companies don't break even on cash flow and are reliant on VC to grow. That is actually from Entrepreneur Magazine. I was going to put the source in there. And so basically, this basically means that the majority of companies that are venture funded, they uh they don't have the margins and the cash flow necessary to be fueling their own growth. If they don't raise VC, they will die. So that means that if you raise a seed round and on your own, you're not able to grow beyond that and you have to raise a Series A, that means that you have a great deal of faith in the market that Series A will be available when you need it, and Series B and Series C. But as we see with the pullback, it's a toss up. You don't know if the next rounds are going to be available to you. So one of the core things as a company you should be looking at is your self-sovereignty and your ability to grow with or without VC. So how did we get here into such a strange situation? So this is a graph from MIT Economics, and it is the waves of innovation that have taken us into the new paradigm as a civilization over time. So as you can see, the first wave was water power, textiles, and iron. Then we had steam power and rail. Then we got electricity and chemicals and combustion engines. The next one is electronics, petrochemicals, and aviation. And as you can see, most importantly, so the last two waves are the most important, which is from 1990, we've been in the fifth wave, which is the internet bubble, and all of the software and hardware that had to be built to power the internet. And after that, in the 2000s, we started to get the apps, the platforms, and the marketplaces like the Ubers, the SaaS platforms, enterprise platforms that we all use today that we don't even think about. All of that was built in the last 20 to 30 years. And the majority of these apps and platforms, I would say, are efficiency or productivity based. So we had this entire analog system, right? It's all this physical world that we had to put online, and there's a great deal of value created in productivity and efficiency. So now, starting in 2020, we're actually in the sixth wave. And I believe that after 2020, the previous categories are only going to reap marginal returns, because as you can see, that curve is going down. And the next curve is quantum leaping, because each of these curves are getting higher in a shorter amount of time, which means that if the last one was 1990 to 2020, the next one could be even 10 or 15 years. So we're about to see a paradigm shift like we have never seen in this world before. But what are the sort of ventures that are going to be part of this shift? Most people can't even imagine what the sixth wave entails. And on this graph, you can see they think it's AI and IoT, robots and drones, and clean tech. And I actually I think, yes, of course, to all three of these categories. And I think that there's an even deeper understanding that we can create for this sixth wave. By the way, feel free to be putting stuff in the comments as I go through. I love seeing what you're thinking and how you're receiving this material as I go through. So, sixth wave. Actually, why don't we hear from you? What do you think this sixth wave of innovation is going to be for planet Earth in the next, they say 25 years. I think it's in the next 10 to 15 years. Quantum. Anyone else? Space travel. Social capital over financial capital, environmental regeneration, carbon zero, solar-driven fuel production. AI plus clean tech plus circularity. I love that answer. Agriculture. Great. So what I believe is that the next exponential wave will be systems change ventures. This is a term that I coined. And So as our existing institutions begin to crumble and transform, these are the ventures creating fundamental value for humanity. Because like I said, the last wave was about efficiency and productivity. But at this point, productivity is a very incremental and marginal value add. So what can you provide that creates a huge value add? It's going to be things creating fundamental value for humanity. And that's going to be the birth of the new paradigm. So here's three fundamental values behind what a systems change venture is. And I have more, but I'm just starting with the first three, which is, okay, so in your vision, in your long-term vision for your venture, you're identifying a core lever of transformation based on why the industry is collapsing, and you're riding that wave. As opposed to most ventures right now who are unaware, who aren't thinking in terms of paradigm shift, they often are creating fun technologies without a holistic industry vision. Your moat is not just going to be your technology. Like in the past, just technology could be the moat because the tech hadn't been developed yet. Computers weren't there, internet wasn't there, the hardware and software wasn't there, all these apps weren't there. They're there now. So tech plus an actual transformative impact on your community will be your moat or your competitive differentiator in the marketplace. And I'll go into that in just a moment. And the third one I want to hit on right now is leadership, which is that systems change ventures will have the fortitude, the determination, and the resilience inside the leadership to keep values and purpose at the center and not letting it get corrupted over time, which is what happens in the majority of cases. And I will talk more about that. And it has to be codified into the systems of how you're building. So let's start with number one, vision. So what does it mean to identify a core lever of transformation based on why the industry is collapsing? And so first, we have to look at the surface level. So whatever industry you're in, you're going to see the canary in the coal mine, right? You're going to see the statistics around the fact that something is crumbling and collapsing, but you're not going to see the root level cause. So in a few of these industries, here's some statistics that you can look at that tell you that, look, there's a seismic shift happening under the surface because under the surface, because on top you can see that these things are happening. For example, in education, in the US, 500,000 teachers have left the profession since 2020. And quitting teaching is a trend blowing up on TikTok with 77 million posts. Similarly, in healthcare, something you can look at is that half of Americans struggle with chronic illness, and an additional 20% struggle with mental health. So in each of these industries, you can see that something is very wrong. And the underlying root reason is that these models are outdated for whatever reason, right? So that's the core. So the core lever of transformation is going to be the antidote to the fact that these models are outdated. So this is an example of some of the core levers of transformation in each of these industries. If the educational paradigm is outdated, we need K-12 education that centers leadership, social emotional skills, micro-learning, entrepreneurship, new economy skills, right? For example, in healthcare, if you're seeing up to 70% of the population being diagnosed with things that the healthcare system can't address, then the core lever of transformation is holistic and mental health, personalized healthcare, telehealth, access, payer systems that make sense, right? So basically, your first role is to identify within your industry what is the antidote to this outdated model that you're seeing. And as founders, I'm just going to say, by the way, this is not a pitch workshop, but when you have the first line on your pitch deck, which is, problem and opportunity slide, you should be hitting on some of these statistics, which is surface level, the proof that something's happening under the surface. And then you need to be defining, like, look, under the surface, this is what's happening. Because oftentimes your investor is not going to be from your industry. And if you can position your solution as having identified this core quantum lever right off the bat, you're already going to set yourself apart. Number two, your moat is going to be your tech plus a root level transformation for your community. So what does that mean? That means that if whatever you're trying to solve, if you think about it in terms of scale, if you reached everyone in the world, would this unlock human potential or healing or empowerment at scale? If it's a social media app, would it make people feel more connected? If it's a healthcare app, would it heal people? If it's an energy product, would it actually create an energy transition for the world, right? So that actually will give you an indicator into whether you're creating a root level transformation at a unit level or at a consumer level. And what is really cool about this is that you don't have to take your customer all the way from here to here, because as a founder, that's going to be your vision. It's going to be this whole transformation you want to take them through. But what you actually need to do is you need to build a product that takes them from A to B, which is the tiniest micro transformation, which is replicable through your platform or your technology. And so, for example, if you want to heal diabetes, even just creating a small behavioral shift to getting them to eat less sugar, A to B, right? And if you can replicate that, if that is reliably replicable, then you can monetize that and you have a business. And over time, you can take them to B to C, C to D, and you will have a multi-billion-dollar company. Because even A to B should be, a multi-million-dollar solution. And that's why I think the root level transformation paired with the tech really is the future. Because the hardest thing to do is to actually create a shift in someone's life. If you can even do that in the most micro level, that's highly monetizable, right? I'm like looking at the comments. Yeah. So that's going to be your moat in the future of systems change ventures. And yeah, I can talk more about this at the end. Okay, so leadership. If you're trying to build the new paradigm, you're part of this new paradigm, it's incumbent on you to keep values and purpose at the center of this very chaotic and corrupt world that we live in. And that is going to be your competitive advantage, because regardless of what it might seem like, the companies that don't foundationally have healthy team cultures and EQ, they may, in the old paradigm, they might have gotten really big, but they imploded over time and it was messy and leadership was taken out, or maybe they had a big IPO and then the bubble bust. So these things do catch up to you over time, and we're not doing this anymore. We're building very intentionally and foundationally from the very beginning. Now, where you'll trip up is, how do you keep that values and purpose at the center over time, right? So this is where you're going to have to learn how to codify your vision and your values into the company structure. So this can look like decentralized governance. There's a term called holacracy, which is an entire decentralized governance structure. It can look like really your product intrinsically having the impact in it, so you can't lose it. But the most important thing is saying no to unaligned stakeholders. And so a lot of this is going to be mindset, and it's going to be you being firm and holding your container, as I call it, holding the boundaries of what you're creating. And when you get a bad gut feeling about someone, trusting that, and also trusting that there's many, many, many people out there who would be aligned and not corrupt the vision and the values. So that's just, there's more on systems change ventures, which I can get into at the end. Those are kind of the first three, and I think they're the first three most foundational components. Actually, let me go back so you can look at them again. And I think that most of the people in this room probably have most of these. Yeah, I see someone said, say no to unaligned stakeholders. Yep, impact equals income. Your product must take users from A to B. Perfect. I'm glad you're getting this. And almost no one you talk to in the venture space is going to be talking like this, remember. And so this all came from my own experience and my own wisdom and my own channeling, right? And every single one of you need to learn how to do this. Is not just copying or spitting out what you heard some expert say somewhere. There's a very good chance that the people who built from the past until now are not going to be the same people who are building for the new paradigm. I'm going to say that again. The people who built from the past, from 1990 until now, are not the same people who are going to be building for the new paradigm. And that's one of the reasons why you're seeing all of the chaos in the industry, is because there's a shift of power happening. And the new paradigm leaders are now going to have to come into power and get the resources and do things in the new way in order to succeed. So always trust your intuition and be brave enough to even put down new processes or new ways of doing things that maybe you haven't seen in the past. So we all have a critical role to play in the new paradigm, and I believe venture is the most powerful lever at our disposal to do this. And the reason that I still believe in venture capital, despite all the statistics you saw on the first slide, is because if you look at our world at large, right, and you look at our financial system, so we're in late stage capitalism. So the most powerful way to shift humanity at this time is through the financial system. However, most of that capital is all locked up in different ways. However, venture capital, which is a subsect of private equity, is the part of the financial system that supports founders, who I believe are the most visionary and resilient individuals who can actually build the things we need for the future. So venture capital still has an incredible role to play in building the new world, because we need founders to get the funding they need to build these solutions, right? However, our definition of venture capital, I believe, will shift and has already shifted. So in the old paradigm, it all came down from the top and trickled down to founders. So you had limited partners at the top, which would be high net worth individuals, maybe a founder that had a big exit and they're reinvesting that capital, or inherited wealth. Family offices, which is, if you don't know, family offices are when high net worth families pool their money together into a structure to invest. Or institutional. So example of that is pension funds. There's trillions of dollars in pension funds currently, which is that's actually retail investors, but it's held in these institutions that make allocation decisions to put a portion of that into venture capital. Next, you have venture capital firms. So in other words, they're called GPs, or general partners, who make the decision of who to fund. And then you have founders, right? So the money had to flow from all of these stakeholders and decision makers down to the founders, who are actually the wisest piece of the puzzle, because the founders are the ones on the ground talking to communities and innovating solutions and reading market signs and making that cash flow happen. Put wise in the chat box if you think founders are actually the people in this game who actually know what's going on and what's going to create a return at the end of the day. Okay. So now we're getting into this era where this is all breaking up, right? So if you think of yourself as not at the bottom of this triangle and like, please give me money, it's trickling, like you're actually in the middle of this hexagon. You are a key building block for the future. And it's up to you to create a magnet. You are the magnet, and you are magnetizing capital from various different stakeholder groups and systems that you're using to your advantage. So you can be raising from VC firms, but you can also be raising from industry players in your space, right? There could be corporations that want to partner with you or sponsor or work with, give you a big B2B contract that funds the first couple of years of your journey, right? Financial institutions, so things like loans and other types of vehicles. You have direct investors here, which is people who would have been LPs into funds who are now deciding to deploy directly to ventures, which is happening at an increasing rate. And so these are the family offices, again, the H&Is and angels. You have your institutional LPs on your left, which it's going to be harder for you to tap into them. But as these things breaking up, it's important for you to know that they exist, like the pension funds, the university endowments, and things like that. And then you have public markets on the top left-hand corner. And so people have experimented with this a little bit. You saw the ICO, the initial coin offering craze, like 10 years or 7 years ago, I want to say. There's biotech companies that just create the drug and then they go public within 3 years. So there's different ways that people are kind of playing with public markets as well as a mechanism for raising money, even earlier stage. But I just want you to be thinking in these terms, right? You're not locked inside the system. It's like the whole world of capital is available to you to play with. But how? How, right? So, and I used to run an accelerator called the Female Founders Lab, and I would talk on this at length about the fact that when you anchor into your vision and your values, and then you codify that message into your pitch deck, and you're letting all of it be seen, you will magnetize values aligned stakeholders. But the key thing is letting that vision be seen and heard and articulated in the most assertive and powerful way possible. And getting away from this sense of lack of, I need to get the person in front of me to validate what I'm doing, but instead refocusing on creating and being smart with where you pull in that capital. I would say right now, focus on angels and H&Is over VC firms because they're the majority so far. I mean, maybe a little bit more right now, but since the whole SVB thing, there's just been a pullback on deployment, and most of the founders I talk to, like the firms just have not been deploying capital. Or it can be a combination of the two of angels and firms, but don't just rely on firms. And then the third thing, which I'm really passionate about talking about, is you have the option to think really creatively about your term sheets. And I believe, and we were talking about this at the beginning, but cash flow and liquidity should be a core feature, or it can be a core feature if you choose for it to be. So in the old model, they're investing, taking equity, and then they're getting paid when there's a buyout or an IPO. But there's other ways of structuring your term sheets. So you can have a dividend model where when you have a certain amount of profits, you're paying dividends back to your investors. You could have revenue share model. You could have equity buyback where, and there's a fund called Masters Fund that does this, where when you hit 3x of growth, you basically, the investors can buy back their equity. So you pay them back, or you buy back your equity and you pay your investors back at 3x. So refocus on your cash generation engine, right? Focus on large B2B contracts if you can, and then look at receiving investment and potentially even structuring it in in unique and creative ways is the way to survive right now. Um, I'm like looking at the comments now. Yeah, strategic partnerships. Yep, yep, yep. So that's really good, Tatiana. So that's a kind of like a little taste into where I think we're going. I do offer 30-minute consultations on your strategy or pitch deck. And happy to put that link in the chat box for y'all as well. Um, but we can actually open it up a little bit to questions right now.
Wonderful. Thank you so much, Nilima. That was really such a great framework to kind of I love this idea, very aligned of like putting founders at the center of this whole network because it really is true and uh, really offers a different kind of framework for understanding how entrepreneurs can really find confidence and build a comprehensive strategy with diverse connections, diverse opportunities, and just wonderful introduction. So I know we're gonna have a lot of live questions, but I just wanted to go through a couple follow-up questions from some of what you talked about. So many entrepreneurs in the audience are at an early stage, maybe in their first 5 years of business. And so how can these purpose-driven founders assess if whether or not VC or dilutive capital is the right fit for their business model? And what role do values or should values kind of play in that decision-making process?
Yeah, so I'm going to separate angels and firms here because with angels, you have a lot more freedom to just structure it the way you want. Um, but with firms, basically, you're going to want to be able to exit, grow 100x and be able to have an IPO or a buyout, according to the old venture paradigm, which is what everybody is still following. And so if you have a technology that can do that, then raise venture and go for it and go big or go home. I'm still believe in venture capital. I think I'm a huge believer in this space because I think that we need your companies to scale and reach millions of people. And VC really can do that and provide the necessary capital to grow at that pace. Um, and some of you don't want to grow at that pace, and that's fine. So find angels where first thing you have to do is you have to sit down and be like, okay, I can grow 3x in 5 years, say, right? And present that to angels just believe in you. They believe in what you're building. So whatever you come up with, if it's true to you, they'll be like, okay, cool, that sounds good. Right. And you can even come up with like a payback scheme. Like I said, dividends, equity buyback, like there's so many ways to do it. So yeah, you shouldn't shy away from raising capital just because you're scared that you can't grow 100x. Like you can find other types of investors for that.
Yeah, absolutely. Yeah, I think that's a really great kind of place to draw the line that entrepreneurs can kind of be like, okay, where do I stand here? So thank you. That's super helpful. And then just a follow-up question because yeah, I love that, you kind of have this energy behind VC as a pathway to secure capital. But you did mention, specifically about how a lot of venture-backed businesses might fail without that support. And so,
Mhm.
what are your thoughts on how entrepreneurs can kind of ensure that their business doesn't become solely reliant on VC funding? Is that something that they should think about? And maybe just any thoughts you have on supporting the path to cash flow break even.
Yeah, I mean, so if a investor invests in your company, that's not a key success metric. Your key success metric is your cash flow and your the outcomes that you're creating through your product and the micro transformations and your technology and all of those core things. So make sure that your key metrics are in the right place. Because when raising capital becomes your biggest core metric, that's when things go wrong.
Yeah, absolutely. And I know so many of these purpose-driven founders in the audience are really trying to hone in and identify those key metrics. So that's just great to keep in mind. Wonderful. And so for those entrepreneurs who are kind of gearing up to secure a funding round, what strategies can they potentially use to establish a strong foundation before going out seeking that investment and maybe
That's
just,
literally the most important part is literally everything that comes before you go and you try to raise money, which
yeah,
most founders don't. Inner work is so devalued in our society, but you have to put yourself, you have to feel relaxed and anchored and happy and confident and excited in what you're building. And I would say the majority of founders don't feel like that. So that's your number one issue. It's like you have to go all the way back to the drawing board. You have to sit down, re-ground yourself in what you're trying to build, like how you felt on day one and you probably lost all that energy and excitement over time. And it's because you're at the end of your rope, right? So you need to literally have a reset button that happens in the few months before you even go out and start to fundraise. And this is part of what I do in my coaching and consulting with founders. But in that reset button, what you're going to do is that you're going to sit down and it's almost like you're going to write down all of the things that you've created over the past couple of years of running your venture. I got this many customers. I made this much money. We built this product. And you're going to put it into this, like, it has to be a book that's closed. It can't be a book that's still open and you're like, in the chaos and the turmoil of the creation of it, when you're talking to investors, when you're talking to people, you're just reciting something from a closed book. I did this. I made this much money. I did this. Oh, what are you doing for the future? I'm going to do this. I'm going to do this. I'm going to do this. Oh, why you? Because I've done this, and I've done this. That's the energy, right? It's literally, so you need to codify those answers way before you even get into the room with somebody.
wonderful.
If that
Love
makes
it.
sense. Yeah.
Yeah, absolutely. And yeah, I think that confidence piece is so critical for a lot of entrepreneurs getting up, that it can really make all the difference in the execution of that pitch. So those two really go hand in hand. Awesome. All right. And so I love that you kind of alluded to this next exponential wave of innovation for humankind. I know, as you mentioned, a lot of entrepreneurs kind of see that, as the rise of value aligned ventures or, as you mentioned, AI or IoT. So thinking about that with all of the information and technology that's becoming available, how can purpose-driven founders gain the clarity it needed to cut through that noise, focus on the fundraising, product, business development, all those kinds of opportunities that will contribute to long-term impact, while maintaining alignment with those values?
Yeah. So raise your hand if you think that you're a great founder, if you're working more. I grind for 10 hours a day. I'm such a great founder. Oh my God, I'm so tired. I'm such a great founder. Like, do you realize that if you're exhausted, your body is not going to want to scale? So you have to make space to scale what you're currently doing. So if you're working less, and you've created systems and structures that work for you, and you're rested and you're put together and you're working 4 hours a day, there is a much more high likelihood that you're going to scale because you're like, oh, I have so much space. Like, of course, I can scale this 10 or 20 or even 100 times. But if you're already at your breaking point, why would any part of you even feel like you could scale that? Right? So you need to go back to the basics and really just, we have to flip the entire thing 180 degrees. And you have to take yourself one level up and look at it from the top and be like, how can this be a calm and stable process? I actually forgot what the question was you asked me because I just got on my soapbox.
No, yeah, but that's no, I think that that was a really great answer, just in the sense that entrepreneurs, really need to identify those priorities early on, and that's going to be the driving forces behind those kinds of decisions. So yeah, no, I think that's super helpful. And I love that you kind of we're talking about scale in particular, and because a lot of entrepreneurs are kind of at that point where it's like what needs to happen for me, for my business, in order for this to scale up. And I think in that process there's this secondary concern of, how can I ensure that as my venture scales, my business stays true to its purpose? And, maybe if you could just dive into some of the challenges that purpose-driven founders may encounter, as they look to maintain alignment with those original values and purpose while bringing in that kind of venture support.
Yeah, so I think that it's down to the leadership. So if the founder, and I see with female founders specifically, is that you're much more likely to stay true to this. And so if you are staying true to it, you're good. That's gonna be reflected in your organization. If you're not, then it's not going to be. So at the end of the day, it's up to you, and you that's harder than it sounds because you may have to invent new ways of doing things and become creative in order to stay true to your vision and your values. So for example, if you actually don't want to sell your company and you've taken venture capital, already you're at odds. Now you're going to have to compromise your values because these are like two opposing things. And
Yeah.
so that's where you have to step into your creativity and say and stand for it and be like, okay, I don't want to sell my company, but I can pay back this amount, or right. So it's like you have to decide what you want and then you have to find a way to make it happen systemically.
Yeah, that's really, really a great point. Thank you so much. And I think that's something that a lot of entrepreneurs can kind of resonate with is, oh, hold on, maybe let me think about this a little bit more. And if this is something that um is really going to bring me closer to those long-term goals that I have for myself and for my business. So,
Yeah,
uh,
and at the end of the day, we're making it up. We're not just making it up in terms of your business, we're making it up in terms of the actual systems that support us. So
yeah,
it's no longer that we just have to worry about building the company. We have to worry about rebuilding the entire systems that are supposed to already be in place to support us. So,
yeah,
like,
love
at
that.
every level, we have to be thinking through it differently, no matter where you are
Yes.
in the system.
Ah, so true. And love that you brought that up. Thank you. Awesome. I think we are gonna transition. So start taking questions from the live audience here in the
Yeah,
room.
there's a bunch
Uh,
in the chat box too.
yeah,
In
and
Q&A.
there's one here that I think is really interesting. Would love to start with specifically on this new paradigm framework that you propose, this person is kind of wondering how do you think this may, I guess, in the short term or the long term, impact funding sources for founders? Does this mean that VCs will democratize more and become a little bit more realistic on their exit yield expectations? So any thoughts on this kind of what the future may hold?
Honestly, I think that a bunch of the VCs are going to quit the game, and a whole bunch of new VCs, including female VCs, are going to join the game.
Mm,
So I don't
interesting.
think the existing people are going to change, guys. I'm sorry. They're not going to change. They're just going to their funds are going to shut down because they're not able to survive. Like they're not able to operate anymore,
Right. Yeah. That's yeah. I
which
th
is good. So then we'll
Yeah,
have more
exactly.
democratized funding because we'll have different people controlling the capital flow.
Right. That'll be
And
really
then there's like
interesting.
cool things people are coming up with, like AI-driven matching platforms and stuff like that. So people will come up with things to help democratize. Like, for example, there's somebody working on an AI platform to match the direct investors I was talking about, like family offices to
Yeah.
founders. And so that stuff will start to come up. And if you can even build something like that. I mean, I think that's a great thing for one of you to build.
Yeah, definitely. And I know we had a couple folks in the Q&A kind of wondering how to find value aligned investment or funding opportunities, with their specific industry. So would definitely agree to go look into some of these different, options that are out there that exist to support entrepreneurs in matching them with those well-aligned investors or financial institutions. So that's love that. Um, and then, we had another question here. Um, and I think this is so relevant just given the current state of the world. And there's the current socioeconomic and political climate is volatile. So any advice for entrepreneurs on just kind of staying the course, or continuing through, pushing through with limited runway?
Yeah, just like it's just like everyone's going through a spiritual journey. Like,
Yeah.
honestly, we just need to get back to basics. Like, you need to structure your life in a way that allows you to breathe and have, family, people around you that support you and do the things that light you up and nourish you. And that's going to be number one. And part of that is retraining your mind to make those things a priority, right? And then you're not going to push through. Like, we're not pushing through anything. Like, it's just you being able to re-anchor,
Hmm.
have more sovereignty over your time, over who you're letting in, over your resources, and being very, very strategic and very intentional about how you build in a way where you're not going to run out of cash flow and you can just like we're not gonna sprint our way to the finish line. That's not gonna work anymore.
Hmm. Yeah, no, I think that's really poignant. So thank you. Awesome. I think we have time for one more question. I think this is really interesting. This person is asking, in kind of our endeavor for sustained systemic change, there are many barriers that entrepreneurs face that can take and just that the market landscape itself and the investment landscape itself faces that take time and that doesn't necessarily go hand in hand with the quick timing expectations that VCs often have. So any thoughts on this dissonance and how maybe we as a collective community of entrepreneurs and stakeholders can kind of work to reduce these barriers to systemic change that we've kind of talked about?
Yeah, so the whole speed thing. So basically, all of the systems, like the way that we think about things, is based on that last wave that we saw from the 1990s. So in the 90s, companies were very easily raising capital and exiting in 4 or 5 years. And so part of our brain or part of our collective hive mind still thinks that that's the expectation for companies to do. But in real life, when you look at the data, the reason that this whole pullback is happening is because funds aren't getting their exits even in 10 years, and they're putting an extension 12 years more, and so we're seeing in real time the evidence that companies aren't exiting in 5 years anymore. They're requiring more time to exit. And and so it's just a matter of us like catching up to the reality of what it is and not placing expectations on ourselves from the last wave. Because it's like the internet is already built. We're not gonna build at that speed because we're building different solutions now for a different age. So even like the timing might be different, right?
Yeah, absolutely. Well, Nilima, this has been so wonderful. If you had just one key takeaway or piece of wisdom to leave with the audience, what would that be?
That there's a reason why you are here doing this work. Because I really truly believe that nobody decides to become an entrepreneur or founder just because it sounds cool. There has to be some core energy, some core reason, some core lived experience that's really pushing you to do this. And you need to listen to that part of yourself and your body and be in tune with that piece of yourself because that's where the answers are all going to come from. And it's not probably going to look like ventures you've seen in the past because we're all just now figuring out what this new paradigm of venture looks like.
Totally. Well, thank you so much for taking the time to speak to the community, share these insights, and set just such an incredible overview of this new framework that we can hopefully work towards. And on behalf of the Nasdaq Entrepreneurial Center and everyone in attendance today, we are just so thankful that you joined us.
Yay, thank you so much. Oh, thanks for the I love seeing the comments as well. I'm gonna like just look at them coming in
Oh,
for a
right. I know it's
second.
wonderful. And yeah, we'll share those links in the chat that Nalima mentioned. And we'd love for you to join us for upcoming webinars as well. We're going to post some ch links in the chat, which you should check out to access those upcoming events. And thank you all so much for joining us today. We look forward to welcoming you back online with us soon.
Thank you. Bye.